Best practice self-responsibility frames for crypto. I wanted to share with you some thinking around how do people take more control of their crypto wealth so that they can further their portfolio in all market conditions. For most people hearing that sentence that I just shared, they would think to me, but isn't crypto volatile? Isn't it just all people gambling on all their favorite meme coins? And doesn't Elon Musk tweet something about some doggy coin or Dogecoin thing? What is that even? How is that even possible? Well, what most people miss is they see the tip of the iceberg, which is all the noise around crypto, which is price action, some 14-year-old becoming a bazillionaire, some other person losing all their money to a scam, or whatever it might be. And there's a lot of noise on the surface. But when you start to just peek below the surface, you see things like blockchains and smart contracts, and you start to see that actually there's some real technology behind this stuff. But what's below the surface from a wealth strategy perspective is when you start to notice that there's more than just volatile assets here. There's actually things like stable coins, for example, that can give you a relative value to your expenses, your everyday costs, your everyday way of living. Like you pay your bills in your native currency in your country. So whether it's Australian dollars or Singapore dollars or pesos or whatever it might be, the fact is that currency to you is actually most related to in the relative nature of where you are and how you transact and what your rent is delineated in and how do they charge you for your coffee over the counter. And that's how you experience money on the forefront mostly. So when you see all these volatile assets, you kind of can get a little bit scared and go, well, I don't want to try and figure out how much a coffee is going to cost me in Bitcoin or Ethereum or any of those kind of things. But also when you start to peek below this surface, there's more than just stable coins too. There's these functions that can create things like peer-to-peer lending and allow us to earn money in a safe and secure way by using these little strategies that are governed by code that keep us in the realms of what is the contracts and the rules of the game that are laid out for you to play with. So you can do things like lending and borrowing, liquidity pool providing, and there's things you can do that are relatively low risk for relatively good returns, especially compared to your traditional savings account or returns you might get from your bank. I don't know about you, but the last time I saw a bank give me interest in a bank account, it was like 11 cents or something. I'm like, what is this? This is just like rude. Like, why give me crumbs and tell me that you're giving me something? Because that's nothing. That's less. That's really just rude. When at the same time, those same institutions are charging 20%, 21% for credit cards or personal loans of 8 to 11%, or they're charging gouging fees at every turn and corner. And that's all to keep their big buildings and ivory towers well air conditioned, well lit, and their wages fully lined so that they can run these big over the top organizations. But we can have it a different way. Just like Uber disrupted taxis, we can have it where you and I can bank together and we can do peer-to-peer banking in a way where we don't need buildings, we don't need middlemen, we don't need these intermediaries. That's not that word, but we don't need intermediaries to be the people between us and what we want. So if you would like to get more of what you want, start to look below the surface in crypto. It's more than the noise of volatile assets. It's more than somebody just made money overnight. It's actually the future of how consistent, stable, ever-growing wealth will be made for you and probably your friends as well. So yeah, pay attention. There's more going on than meets the eye.